Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're moving higher once again today. 10-year note futures higher 4 of the last 5 sessions. Today we're looking at the futures market trading up to the highest level in 2.5 weeks. Currently priced at 108.24, which is just off the intraday highs. Driving factors today, a couple things. Number one, the primary focus appears to be on the new administration coming in, and particularly the focus on tariffs, which were announced, and they were viewed as not as strong or stringent as what was anticipated. At least that appears to be the driving factor today, or one of the driving factors. And that's creating, I think, a bid, particularly on the back end of the curve when you look at the futures markets and the interest rate environment. Couple that with also issuance as far as government issuance, and so we're seeing a shifting dynamic in the Treasury markets as far as that's concerned as well, and that could be another factor contributing to the higher prices that we're experiencing, and particularly, as I pointed out, on the back end of the curve. Now, looking at that yield today, 10-year yield is down 4 basis points today to 457 basis points. That's the lowest yield on the 10-year in 3 weeks, going back to early January, basically the first trading day of the year. So yields are back to where they started the year. On the back end of the curve, we're seeing, again, the bigger movement on the back end of the curve. We're buying pressure stronger. Those yields are moving lower relative to the shorter end of the curve, and therefore we're seeing the yield curve flatten some today. But again, yields continue to move lower here when you look over the past week, and particularly at the 10-year, where we're seeing them now trading down to the lowest yield in 3 weeks.